Well, is option trading speculative? Let's decode this today. Investing in a stock or index is a way of speculating on the future performance of that company, such as their projected revenues and earnings. When you invest in an option or contract, you are speculating on future market conditions rather than the performance of any particular company. In order to understand how option trading works and whether it's for you or not, it's important to know what options are and how they work. In a standard stock option, the buyer receives the right to buy the underlying asset at a certain price, that is also called as the strike price, for a certain period of time, the option period. Alright. In options trading, you can speculate on future market conditions by buying an option contract. These contracts are essentially bets on an asset. The wager is paid when the market moves in your favor, while your losses are limited to the amount you paid to buy the contract. This betting is known as long because you are betting that a favorable outcome will occur. The price of an option contract can be calculated using factors such as the strike price, time to expiration, and the amount of leverage you are using. Options trading basically involves buying an option and the correspondence amount of stock. If you want to profit from a rising market, you will buy options that allow you to buy more shares at a higher price. However, if you want to profit from a failing market, you buy options that allow you to sell shares at a lower price. The highest percentage return is achieved when both your long and short positions are winning at the same time. This is referred to as outperformance or winning big with small bets. Option trading for beginners is a very difficult and risky investment. You need to know the stocks well, have an understanding of the market, and be able to understand the risks involved in option trading. For instance, when you buy an option contract, you are selling shares of stock to someone else in exchange for their money. When you lose, you don't lose any money, but if your trade goes against you, your loss can be huge. Buying long options is speculative by nature. There are always a chances that the market moves against you and the loss can be limited. However, the potential gains can outweigh these losses. Option trading is not for novices or beginners. If you are beginning to trade stocks, there are much safer investments that offer high returns with less risk. In addition, there are also ways to effectively grow capital risk-free in order to increase your chances of long-term success in the market over time. First and foremost, it's important to fully understand how options work before you try trading them for a profit online or offline. A more educated and experienced investor would never consider trying to make a big money by trading options. The key to success in option trading is recognizing the differences between an option contract and the underlying security. When you buy an option, you are buying into a position on that security. It's important that the price of an option closely matches the price of the underlying security, or at least has a relationship to it or is correlated to it. Options are usually compared relative to some benchmark index such as the S&P 500, Nasdaq 100, or Dow Jones Industrial Average, or in India it is Bank Nifty 50. Alright, so the rules for determining how many contracts can be bought or sold at one time are based on this index and clearly stated in the regulations published by the regulators. A hedge fund or a serious trader will own the underlying security but will want to hedge against price moves by buying options that protect the position. However, when you buy an option, you're actually buying a position on that underlying security. Options are normally entered into as speculative positions and used to be speculate on future market conditions. They are not always for hedging purposes, although any option can be used for hedging in certain cases. And this is where confusion can come into play. If you want to profit from a rising market, you buy options that allow you to buy more shares at a high price. Okay, that's not all. Do some thorough research and attend classes from any professional before you go for option trading. First and foremost, last and least, you learn it and do backtest in paper trading. Okay, this is very important. Do it in paper trading. Once you got the confidence, then only enter into the real market with the real money. All right, take care, trade smart, win success. God bless. Bye for now. If you like the video, please like, share and subscribe. Thank you.